Well, greetings to all my clients. My name is Walter Measers. I'm with Trinity Wealth Solutions, your investment advisor and tax advisor. Just a quick disclosure, this video is intended for my clients. Anyone else watching this video, this is not investment advice, or it's not intended as a solicitation to buy or sell any securities. If you want more background about myself and Trinity Wealth Solutions, you can go to FINRA website, brokercheck.finra.org, to get more details about myself and my company. And also, you can pause the video to read the full disclosure of this video. So let's get into some headlines from Yahoo Finance. The big headline that we see is Trump tariffs spark worst weekly meltdown since 2020. Again, markets don't like uncertainty. There was other underlying already weakening economic data that really caused the markets to go into correction mode. Trump tariffs just accelerated that correction of the market because, again, the data we were getting, economic data, was definitely slowing down. So this just pushed it over the edge, with Trump announcing 2 days ago tariffs that were larger than what the market and experts were expecting. So kind of an overreaction maybe to these tariffs. But again, the underlying bigger picture is there's definitely economic slowdown. And I've been talking about this for the last 2, 3, 4, 5, 6 months. And some clients, well, Walter, you keep saying there's a recession coming. But again, the data is showing it was pretty clear 5, 6, 7 months ago there was economic weakness. Over the last 2 weeks, just consumer sentiment is really falling off. And it should be interesting what that reading is going to be in April. Also, first quarter GDP is going to be announced, I forget, sometime in April. And again, prognosis is not good. Most likely a negative read in GDP. Again, economic slowdown and growth. And again, the tariffs just accelerated that recession. Maybe it was 3-4 months down the road. Maybe it's sooner. Again, nobody knows for sure. So let's get into the charts. Let's go back to 1 day. I'm recording this on April 4th, Friday. So you can see, let me just refresh your memory what these lines are referencing. QQQ. So QQQ is kind of the green line. SPY, which is kind of the aqua green blue. TLT is long duration bonds in kind of pinkish. And obviously the gold line is gold. I just want to compare how they're reacting differently to the uncertainty. So for 1 day, the markets, meaning Friday, down, broad market almost 6%, and NASDAQ or technology down about 6.2. If we look at 5 days, we definitely see there was a breakdown. Trump announced tariffs, and so there was a huge pullback. And again, Friday, the sell-off continued. And how far it's going to go, we really don't know. Sometimes some of my clients were asking, well, Walter, why aren't we getting into gold? Well, gold is really at the top too. And most people think that gold is a safe haven. No, when markets are correcting, as you can see, gold is correcting too. Nowhere near what the market is. But if it continues, gold may continue to go down. Not sure how far, But historically, gold will follow on to the downside if markets are correcting. If we look at 1 month, this is S&P. We are in correction. What's the definition of a correction? When the market pulls back 10% or more. And NASDAQ over the last month is down 15%. The broad market, S&P, down 13%. So pretty much the broad market is in correction territory. Question is, will this get into the next phase, which is a bear market? Bear market definition is anytime you have a 20% or more downside correction, we are in bear market. The Russell 2000, which is the even broader market, is in bear market territory already. So that's not a good signal. If the broad, 2000, the Russell 2000 is in bear market, the probability of other indexes going to a bear market is getting also higher. 6 months, again, we definitely see the trend is down. For 6 months, broad market 10%. Technology 12. And for 1 year, actually, if somebody was fully invested in the market, they pretty much gave up all their gains from last year, because it's really, the index is down, broad market about 2, almost pushing 3%, where technology is down over 4%. So sometimes clients ask, well, Walter, we're missing the uptrend, the upside. We're not doing as well. I said, I understand, but you have to remember what our goal and objective is. First, protect. If we do that, we've been out of the market for 3 weeks, just to protect clients' portfolio. We got a sell signal because markets looked like they were topping, and the signal will say, hey, there's potential, downside risk. The downside risk was very, very high. Again, there's no certainties, there's no guarantees, there's only probabilities. So we said, hey, the probability is too high, so we're going to step back and be on the sidelines, and it was the right decision to do. Now, is that going to work out every time? Absolutely not. But this time, there was tremendous uncertainty that the charts were showing. The research company that we get technical analysis from, definitely they were really getting concerned. So if we look at 5 years, again, there was trend started really in 2020, went up. There was a pullback in August of 2022 was kind of a down year, and then again the market started to go back up, and now the trend line has broken. It's really starting to trend down. Is that going to continue? Again, there's no certainties, only probabilities. So bottom line is, we're sitting on the sidelines, and when are we going to get into long duration bonds? Time will tell. I mean, right now it's still too early to start thinking about long duration bonds. As you can see, this is TLT long duration bonds. It's kind of was trending up. Now it's going down. Now it's going back up. There's still no certain trend up. Once we get a signal from our research company, then we may get into long duration bonds or inverse ETFs. But one of the things I want to stress is, when markets are correcting, actually, remember I talked about there's 4 stages in a stock market, and we are in stage 3, topping, and now we're approaching stage 4, a correction, a pullback. That creates opportunity. So I want to stress to my clients, just because markets are correcting doesn't mean we can't make money for our clients. Sometimes that creates even greater opportunities. So stay tuned. We're just going to sit and watch and, see which direction the market may go. But at this point, my clients are sitting in U.S. Treasuries, 1 to 3 month U.S. Treasuries guaranteed, paying about 4.3%. So if you have any friends, I have a favor to ask. If you have friends or relatives that are maybe have lost, were exposed to the market too much and they're losing money, I'd love to talk to them. If you want to pass on my information, my number, I would love to sit down with them, to talk to them and give them our perspective, how we manage monies, and the value that we can bring to the table, not only managing money, but tax planning, the whole holistic estate planning approach that we do for every single client of mine. So thank you for watching. Have a great weekend. Stay tuned for next week, and we'll see what the market brings us. Take care. Bye now.